Hello everybody and welcome to Green Star Trading with me Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. It's just coming up on 20 minutes to 11 AM on Sunday the 28th of February 2021 and we're going to spend the next few minutes looking at gold. Now I know I only covered gold just last week, but a few changes to the chart that I need to update you with here. So we're going to treat this as we would any normal video, and we're going to start with our basic technical analysis first and our Elliott wave analysis second. So if you're new to the channel, let's give you a quick rundown of the chart here. So first thing, we've got our Elliott wave count, which is all the numbers and letters on the screen you can see here. Let's just clear them out of the way. Then we've got 4 exponential moving averages, which is a 10 in yellow, 20 in blue, 60 in orange, 250 in green, and we also have a single simple moving average here in this kind of magenta color. This is a 200 moving average. We have a volume profile here on the right hand side. This is a visible range with a built-in point of control, which is our yellow dashed line here. We have our RSI set to a 10 close with the green 30 level at the bottom representing oversold conditions and the red 70 level at the top representing overbought conditions. We have a MACD with a 10 for the short-term moving average and a 20 for the long-term moving average with a 9 to smooth. So here we are on the week chart in arithmetic scale, and what can we see? We've come down through the 60 exponential moving average on the weekly time frame here through the orange. We've tested it before, as you can see back here on the week of the 16th of March, and we've bounced. We haven't bounced here. It looks like what I said in my last video, basic technical analysis is contradicting what we're seeing with our Elliott wave count at the moment. This is why I'm updating the video. I've gone back and I've adjusted the move up in the Elliott wave count, but not the corrected portion of it, which is still the same. We're going to come to that later, but let's just focus on the basic technical analysis first. Below the 60 with nothing really between us and a long drop. Okay, we're right sat around this volume node here, you see on the right hand side. Price closed pretty much at the tip. I mean, obviously if I adjust the chart, we're going to lose a sense of that proportional volume because it's a visible range. But let's just see how long it stays relevant for as we move along. So it's still relevant here. So big nugget of volume in the profile, and we find support. Body of the candle closes pretty much at the tip. However, 10 exponential moving average has crossed over the 20. And the 10 and the 20 are both trending down and have provided weekly resistance. If you look, the wick of the candle came straight to the 10. Literally kissed it, and that was resistance. And then sold off quite violently with quite a long wick to the upside. We're getting very close to having the 10 and the 20 cross over the 60 with the price below it. Now that's bad. That's just going to be bad news. Well, it's not bad news if you're short. It's good news if you're short. And if you got in at the top here, well done. Keep riding it. You might well be right. So yeah, things are looking a bit bearish from a basic technical analysis point of view, but we have to consider other things in the basic technical analysis, which is our RSI telling us that we're approaching oversold conditions. We're not there yet, not on the weekly time frame, so we could fall lower before we get that oversold condition, but the closer we get to being oversold, the more likely we're coming towards a bounce. We're more likely we're coming towards a bottom. The MACD, however, just continues to accelerate to the downside, and more bearish momentum coming in over the last 2 weeks. Another larger red bar on the histogram here with the short-term moving average in blue accelerating away from a longer-term moving average. That's bearish as well. So let's come down to the day time frame and see how this thing looks. Now, if you thought it looked bad from basic technical analysis point of view on the weekly time frame, it looks worse on the daily. So, you know, always doing my best to cheer you guys up. So below the 10, the 20, the 60, the 200 simple, and now the 250 exponential, which was a major test back here on the 30th of November. We're sat below it all. We've come up and tested the 20 of a day time frame, got a crossover of the 10 over the 250. We're going to get the 20 crossover this week. We're going to get the 60 within the next 2 weeks if we carry on like this with the price below them all. With nothing below us now, okay, apart from this chunk of volume. So yes, technically, from a basic technical analysis point of view, this is looking bearish, and you know, we are in oversold conditions now in the daily RSI, but there's no bullish divergence to speak of in the shorter time frame. We do have the low here on the 30th of November is lower than our current low on the 26th of February. So we have a low and the low and the low and a higher low. So there is some bullish divergence over the longer term. But if we move down just a little bit next week, that bullish divergence will disappear and will not be relevant. If we bounce from here like buggery next week, then that divergence may have been relevant, but we need to see that reversal before we can have any confidence in it at all. Okay, so that's the basic technical analysis for gold. So now let's bring up our count and talk about what I've had to change here. So, like I said, the corrective aspect since the high is the same. I will talk you through that again in a moment, but the most important thing is that our targets for invalidation have moved. I've been talking about how I wasn't happy with the length of this correction relative to the previous wave. I'm saying this was a wave 4, 3 into a wave 4, and that I had this point here as a wave 1 and a 2, and the disparity in size was becoming absolutely ridiculous and unsupportable. So I've had to go back and reconsider what I'm looking at. So full screen, we're going to come down and work our way up from the floor. So all the way to our low. Okay, this is our primary wave 2 low. Now I did have this as cycle wave, and I've moved everything down 1 wave degree because that's my confidence in the long-term bullish bet for gold. Okay, I am bull, long-term bull in gold and silver, right? And on the long-term technical data point of view, price action point of view, I think I was over-egging it, calling this cycle wave 1, cycle wave 2. This move up, which we're about to go into and we're looking at currently, makes more sense using primary wave degree because of the way it's counted into a third wave so far. I'll explain that as we go. So 1, 2, huge wave 2 taking from 2016 to 2018 to complete, and I think it was early in 2000. No, it was July through to August, so roughly 2 years to get through this correction into a wave 2. Here comes our storming wave 3 out of the gate. It looks and acts and behaves like a wave 3. See, big acceleration up. I think we've topped into the wave 3, and I think we're working on the wave 4. That's the difference. I now have the intermediate wave count like this, and this is the thing which caught me out for a long time, and I finally saw it the other night. This violent move down here, I was going 1, 2, 3, 4, 5 into a 1 into a 2. If I just show you what I mean, because I know it can be hard to see sometimes. So I was saying we'd gone 1, 2, 3, 4, 5 into a 1. Okay, and then we'd gone 1, 2, big zigzag, and then we'd gone 1, 2, and this was going to be 3, 4. Well, obviously 1, 2, 3, 4 started to look absolutely ridiculous because this is the wave 4, right? And this was the wave 1. So as I said in several gold videos now, I was threatening to downgrade this wave degree, and that's what it is. It's now a minor 1, 2, and this is a primary 3, 4, meaning that we've gone 1, 2, 3, A, B, C, expanding flat into a 4. And that's what was catching me out. Seeing this, I now see this as a 3-wave structure. Okay, so A, B, C into a 4, rather than this being a 3, 4, 5. And that's what has had me flummoxed for weeks, if I'm absolutely honest. Now that we've got that cleared up, 1, 2, 3, 4, 5 into a primary 3, the length of this correction now makes perfect sense. Because we're now comparing the length of our wave 4 correction, right, that we're in, with the length of our wave 2 correction, and now the parity between the two on the primary scale is much more believable. Yes, this is huge, but this isn't uncommon. So this is still a sizable correction, and there's still several ways to count it. So now that we've done that, let's come in and have a look at what I mean by that. So 2-hour chart. Now I know I'm probably taking a bit longer than I thought I was going to in this video. We're roughly still under 10 minutes, so let's try and get this up to speed. So the same count you're familiar with: A, B in a triangle, C into the W, A, B, C into the X, A, B, C, right, looking for into our Y. Now I've come to count this differently. So I'm now saying I was in a bit of a hurry to go A, B, C. and then we got no reaction. So I was like, alright, extend it, B to here, C to here, target zone for our Y, extend it, no reaction. We're now in here, we've got a little bounce, but the count doesn't work for me at the moment. So the final move I'm looking for in gold is this. Now, if that's right, it also supports the count I've got for silver, which is a flush down in a C. Right, a finish off of a C. This is a C of a lesser degree into a Y, but we'd both be moving down together for a while. So if we came down into this end of this channel here, we'd have 1, 2, 3 points of contact on the bottom of this channel, and then we could bounce and get out of here. So on a smaller time frame, if we just come in and have a look at that, try and guide you guys through this. Right, so I think this is just another zigzag. Okay, so we've gone 1, 2, 3, 4, 5, A, B, C, B, and then we've gone 1, 2, and we've got 3, 4 would have to finish before 1760 spot 41, which is the bottom of our 1 here. 4 would have to complete before then, and then we'd come down in a 5th. Now this target for Y is a 1-to-1 parity of the W projected from the X, pardon me, and we've hit that and we've bounced, so maybe it could be over here. So what's the logic for that? The logic for that is we've set a lower low. So here's the internal swing of the X. We've gone A, B, low, high, low, coming down here for our C, right? So if that's the case, then we've satisfied the technical requirement of setting a lower low here, but it doesn't look complete. It just doesn't look complete, because this looks like a 3-wave move which isn't done yet to me. This looks like we've got 5 waves here, 3 waves here, and we've either got, I did have 5 waves here, you see, and I was like, right, let's go. We bounce from this level 1760, but it never happened. We came up, broke that low and set a lower low, so this suggests that this was 5 waves down, not into a C, but 5 waves down into a 1. So if it's 5 waves down into a 1, then we have to count it as a 1. So we go 1, 2, now we're working on 5 in a 3, 3 and a 4, 5 and a 5, in a C of a C, of the Y, of the 4, and then it's over. That's how I see things now, guys. So if we just have a quick look at the Fibonacci retracement, since we know this target for Y is a 1-to-1 parity of the Y, of the W projected from the X to find our Y, would be here, but the count doesn't support it yet. It could be, maybe I've miscounted, it could be, but I don't like it. And with my count for silver suggesting further sell-off, it does seem to make sense. So let's just run up in our primary 3 and see what could be on the cards. Now this is all still bullish case, guys. I need to update my count for the bearish case, which I think we'll look at later. So 38.2% retracement in our target for Y box, pinged with a lower low right here. So there's a major fib level here that's brought us into all this noise of a minor wave 1, 2 here. Alright, so maybe you could bounce here, maybe, but we'd have to see it happen, well, right now. We'd have to turn around immediately, 180, and start heading higher from here is what we'd have to do from Monday's open. So that's going to be pretty clear, I think. If we break down violently on Monday, then that's not going to happen. If we bounce violently on Monday and we start heading straight back up in the 5-wave structure and we immediately invalidate that wave 1 low, then we can be confident that we've bottomed here, but we can't be at the moment. So if we are heading lower to finish this 4, what have we got? We've got the 50 right here at 1618 spot 22. This is right on the edge of the fib channel. So talking about our 5 waves down, 1, 2, 3, 4, 5 into the 50, bum, off we go. Nice retracement completed. Deep for a 4, but remember the time frame we're dealing with, right? The bottom of the market was 2016 up to our wave 1 in August of that year. So you've got to keep the time frame in mind here. So, and the size of this wave 3 move up was huge. Okay, so deeper retracement on the cards for a wave 4, 50 is perfectly acceptable. We've done enough at 38.2 for a wave 4, and but we've got to see a bounce from here to believe it. You know what I'm saying? So we've got to come out. Boom, take out that wave 1 pivot right here at 1760. If we did that in next week, I'd start to feel more confident. If we come out of the fib channel, I'll be even more confident. If we come up and take out the confidence level all the way back up here at 1963, I'd be super confident. I've started accumulating. because I'm a long-term believer in gold. I've been I've been accumulating for years, but I see this as another accumulation opportunity. But I may have been a little early as a trader here, because we could be coming down to the 50 or perhaps even the 61.8, which would bring us back into this prior wave 3-4. Prior wave 3-4 big green box here in this expanding flat correction. Primary wave degree coming back into intermediate wave degree. Fourth wave into a fourth wave is perfect. That would be perfect. Volume node back here as well, right on the 61.8, right on the edge of the channel. If we were to come down to here, like this, and find our way to the 61.8, it may require another bounce up and an expansion of this pattern. We'd have to revisit that if we saw it. But there's my targets now. We could have hit target for Y and be bouncing already. That's still a possibility. We've done 38.2% retracement, which is enough for a wave 4, which is right around this volume node here. That could be good enough, but we've got to see a bounce. Remember all the negative technical data we've been looking at. 50% lower. Nothing in the volume profile saying that it should be the 50 to support it, but it would bring us into the intermediate wave 3-4 for our primary wave 4, which is very nice. But the real nice one here is at 61.8, which is 1510 spot 49 gold price. This would bring us into the previous wave 4, intermediate 3-4, with our primary 3-4 around a huge node of volume right on the edge of the channel, and that would be like, wow, that'd be great. As a trader, you just want to get that. If that happens, I'll be buying that big time styly. Okay, and then off we go into that fifth wave, which we know we're going to come up and clear this third, right? And then guess what? We get to call the top of that 5 when it finally arrives. We get to call that a 1 by this count. If we're calling that a 1, there's another massive buying opportunity coming in a cycle wave 2, and then there's cycle wave 3 off to the moon in the next few years, months and years. So all to play for at the moment. So that's what you're looking for. Does this 38.2 level at 17.25 spot 96, does this provide support? Does this 1-to-1 parity of the W projected from the X for the Y, does this hold this week? Do we bounce from here? Do we swing around the moving averages? Do we turn up in momentum? If we do, we can start to be bullish, right? Okay, if we break down from here, then the 50 is our next target at 16.18, and the 61.8 is our target after that at 15.10. That's it for gold, guys. I know a bit of a turnaround here. I've been following this correction and charting it, as you can see, but it was the lead up into it where I think I'd made a mistake, and I've gone back and corrected it, and now everything seems to make more sense. Alright then, guys, if you're new to the channel and you've liked what you've seen, please subscribe, smash the like button, let us know what you think in the comment section below if you want to, and feel free to share any of these videos. And that might be it for the week, guys. Now I've got a couple of other assets I'm just looking at, but it is really a question as whether I can squeeze it into the rest of the day before the week starts. So take care of yourselves, and I'll see you soon. All the best. Bye bye.